Okay, folks, welcome to Market Wrap. Let's begin with the economic data that was released today. The ISM index came in with a miss. It's important to remember that any number above 50 is a sign of expansion in the economy. The market had expected 51.4. Actual was 50.8. We're at stall speed. So, not a good number. Now, on the positive side, while construction spending missed expectations, the expectation was 0.6%, actual was 0.3%. They revised last month's negative number up to a positive read. So a big move higher on construction spending. That's a good sign. Now, what wasn't spoken about all that much today was the price action. I'm talking about the financial news media. What they didn't speak about was the Nikkei index, which had a big decline last night. Now, overlaid here in blue is the S&P 500, and in candlestick is the Nikkei. You could see that for the most part, the S&P 500 and the Nikkei trade in tandem. However, we have a bit of a divergence now, where the Nikkei was declining, the S&P 500 was rallying since February. Now, why is this significant? It's significant because the markets here in the United States are waiting. They're waiting for Chairwoman Yellen to come into the markets and begin more quantitative easing. But when you take a look at the Nikkei, they have negative interest rates, yet their markets are underperforming ours. So while I was watching the dollar, while I was watching gold, while I was watching the gold mining names today as a fear trade, I kept thinking about what Chairwoman Yellen must be thinking right now if we go to a daily chart of the Nikkei. This is a daily chart. S&P 500 overlaid in blue. And look at the Nikkei. It's down over 1,200 points in 2 trading days. Think about that. And they have negative interest rates. So we have a market that is rallying on declining earnings in expectation of more quantitative easing. But when you take a look at the Nikkei, their markets are falling off of a cliff and they have negative interest rates. So it leads me to believe that the markets are sooner or later going to get the fact that even if we do get more quantitative easing, the best we'll probably get out of the announcement is a quick and admittedly vicious knee-jerk reaction, sending the U.S. markets higher. But then I believe what's going to happen is the question is going to be asked, where to from here? So let's take a look at the major averages here in the States. Dow Industrials up today, recaptured support on very light volume. RSI looking okay. S&P 500 bounced off of this lower band of support. It recaptured it. Remember last week, it closed down below it. Volume, below average. Why is volume important for new members? Volume is important because it's a sign of institutional accumulation. That's what we need to get this market bursting through resistance. IWM, bullish key reversal today, a good day. Last week it did hold support. Volume anemic. Ultimate oscillator looking pretty good, hooking up. The transports, holding on to its, this is a weekly chart, holding on to its 50-week moving average. So the transports are doing well. So an overall good day for the markets. But keep in mind, going back to economic data, we have a lot of economic data coming out this week, with the pimp mac daddy of them all being non-farm payrolls on Friday. So if we see the markets limp higher into that report on declining up volume, get ready for a sucker punch, especially if you have a stronger than expected jobs number, because the markets want bad news. That, in their opinion, will force Chairwoman Yellen to react, to respond with more quantitative easing. In essence, the heroin addicts on Wall Street need heroin. Energy. Nice triangle formation setting up here. We may move higher, but note volume. Big down volume today. And what has me a bit nervous is oil. Oil pulled back today. Didn't break trend. Volume was light. Lower high and ultimate oscillator. Double top on Stokes. I think it's too early to call oil out, but I warned over the weekend, be careful of oil. The dollar dropped big today, but oil dropped back too. And you may be saying, you know what? Gold fell too, as did the gold mining names. Fair enough. But they were extended. Oil was not. All right, after the bell, I opened up a trade in Apple. And the reason is this. It's both technical and there was a catalyst, and that catalyst was Tim Cook. And he gave a fairly good interview with Cramer after hours. So it was an upbeat interview. And when I took a look at the charts, I noted that we had 2 sequential days of bottoming action, very close to the 3 standard deviation Bollinger Band. Now, keep in mind, this is Apple. Apple should be nowhere near trading near the 3 standard deviation Bollinger Band in green. Take note of where we are. We are at support level. This is a very good support level. So we know we have support. Volume is dropping off, yet still above average. Now, when we take a look at a 2-hour chart, we broke out of this triangle formation. RSI hooking up. Volume into the close, strong. Broke out an ultimate oscillator. Double top on ADX red, double bottom in green. Double bottom setup on stochastics. It's like a coiled spring with MACD poised to go positive. So the game plan is this. We will look to ride Apple higher up and into this upper band of resistance at, let's call it, $98 per share. Now, if we break support and we appear poised to close down below 91.89, we're going to stop out of the trade. So we have a good risk to reward entry point. We have a catalyst, which was the interview from Tim Cook. So we'll see what happens tomorrow, but our near-term price target, $98 per share, and we're just going to get out. Quick swing trade. Okay, the U.S. dollar. Let's talk about this because it is important, very important, because commodities are rallying, and they are rallying because we have a weak U.S. dollar. We knew this going into the year. I've been talking about this ad nauseum, that we were threatening to break down below the weekly support level that I mentioned over the weekend. We did that. So today, we had a continuation breakdown, a new weekly low. I'm very doom and gloom right now, but there's a caveat. Short term, as I mentioned over the weekend, I think we're going to rally. We are leaning into the 2 standard deviation Bollinger Band. We're below it. We're also leaning into the 3 standard deviation Bollinger Band in red. We are also at support, last seen back in last August. We bounced off of it today. So when you take a look at the 2-hour chart, to drill down a little bit, take note of this move lower, and then this afternoon we broke out above this upper band of resistance. Now, if we take out, let's call it 2405, that will send commodities, or it should send commodities lower. That will be our window of opportunity to get back into the mining names, the gold mining names, NUGT. I'll get to that chart in a moment. What we're looking for is a big move, a short squeeze on the U.S. dollar. It won't last long, especially if the jobs data comes in weak on Friday. If it comes in weak on Friday, you'll see the dollar drop. So the game plan is look for a rally into non-farm payrolls on Friday. Note the double bottom setup on stochastic. Volume was very good into the close. The back half of the day was extremely strong. Not much in terms of price action, but it was a lot of churning. For every seller, there was a buyer. There was no precipitous drop. And what I'll be looking at overnight is the Forex market. So let me bring that up right now. I'll show you what I'm looking at. So this is real-time Forex trading. This is the euro versus dollar. If these candlesticks are moving higher, that means the dollar is dropping. But take note, here's the upper band. This is a 2-hour chart. Take note of the upper band of resistance. Then I have my tripwire here, this secondary uptrend line. And here's the primary uptrend line. We are beginning to break down overnight on euro versus USD. Does that mean that this can't pop higher by tomorrow morning? This is Forex. Very, very volatile. Anything could happen. But I believe that we're going to get a rally in the dollar. Therefore, this chart should drop, meaning that the euro is dropping down. The RSI was earlier above 80. It is now at 76.38. So it is declining now. So we're moving lower on price. We are moving lower on RSI. I feel pretty confident that in the next day or so, we're going to have a significant rally in the US dollar. It'll be a short squeeze. It will not last. That will be our opportunity to get long of commodities on that pullback. Back to the standard charts. And if you're wondering, I am currently short of the euro versus the US dollar on Forex. All right, so that's the UUP, 2-hour chart, breaking out good stuff. All right, so let's talk now about opportunities. Brazil, BRZU. It pulled back today despite the fact that we had a weaker US dollar, as did gold, as did the gold mining names. So what does that tell me? It tells me that traders believe that the dollar is oversold. They're expecting a rally. They don't want to buy into that rally. It's a smart move to make. So BRZU is pulling back. The rally in the US dollar will be our opportunity to begin buying the BRZU as a long-term position. I think it's moving higher. But right now we want the US dollar to pull back, and then as we see it begin to top out, then we move in, we begin to buy the BRZU, we begin to buy the gold mining names, etc. All right, the 10-year yield. This is a weekly chart. I know it's hard to see, but we closed up today. We gapped higher today. We pulled back and retested the breakout point, and the yield did so despite the poor economic data. So that's a tell. And that also leads me to believe that the dollar is probably going to rally fairly soon. Let's go to a daily chart. Here you have it. We pulled back, retested the 50-period moving average, and we rallied. RSI remains in an uptrend. So we may have a continuation move higher this week. Let's talk positions. SQQQ puts you short of the triple Qs. It got overdone last week, folks. Pure and simple. It's pulling back right now. We were leaning into the 3 standard deviation Bollinger Band. It was bound to pull back. Will remain long. TZA found resistance at its declining 20-period moving average in red. Bearish key reversal today. My guess is that we pull back and we retest this prior resistance level. It should now act as support. If it fails, we would need to stop out of the trade. If it holds, meaning if we reverse off of the retest and close higher on the day, we'll look to add to our position. Volume was light. Stokes look good. We remain long. URA, uranium, breakout point failure again today. Ticking me off. It's consolidating, traded down today. Volume rose. We held support barely. We may need to book profits on this trade. Both lines on Stokes trading down below 50. So we may need to book profits here. I'll send out an alert. Nugget. All right, watch stock. We're going to go over 2 charts here. One is the daily chart. We had a reversal day, a very bearish day. If the dollar rallies, it should be bearish for the NUGT. Now, my kill zone, my target zone for NUGT is between 90 and 104 per share. I think the 104 target is easily achievable. I think the 90 level may be a little bit aggressive, but let's note the volatility here, folks. It's not out of the ordinary, especially if the dollar rallies. And that's really what I'm basing my trade off of, is that the US dollar will rally and the NUGT should pull back. Now, why am I not shorting Nugget? It's because this is such a strong chart. I don't want to short it. Too much risk, not enough reward. Volume was light today. We're putting in lower highs and ultimate oscillator. So NUGT has the potential to pull back further. Let's go to a 2-hour chart. Now, the 2-hour chart, let's update this chart. The 2-hour chart is bull flagging out. Now, yes, it's a bullish pattern. We are still overbought. So while we may move higher in the morning, I'm worried about a sell-off and a possible double top. If we get that, you're going to see the shares drop precipitously, and that will get us to our 90 level. Now, suppose we just move down lower tomorrow. I think that we'll just hit the 104 level, thereabouts, and then begin to consolidate. So ideally, we move higher tomorrow. It fails, it rolls over, and it comes down to our 90 price target, which is right about here. A filling of the gap is what I'm looking for from the open on the 28th of April. So that's the game plan. Hopefully it'll work out. We've done very well with Nugget, so I'm optimistic. Either way, there's always a trade to be had here. LABU, looking good. Bullish key reversal day today. Held on to the 30 level, closed at what? 32.20. So the biotechs are looking good. They had a rough week last week. Bullish key reversal. We may be long of LABU once again. Potash, bearish day today. Couldn't close above resistance. I'm watching it. We may need to book profits. It begins to break down. Platinum Metals Group, consolidating gains. Looking good. Will remain long. No problem here. Chipotle Mexican Grill. Fellow member Chris was asking me to go over this one. I don't see a trade at the moment here. Why? It's because we close on a daily basis right at resistance. Volume was light today. And when you take a look at the 2-hour chart, here's our declining downtrend channel. Where we closed today was right at that upper band. So while it's great that we're putting in higher lows now within this trading range, it's not enough for me to want to buy into resistance. Now, if we move higher out of this range, you can begin to nibble. Open up a quarter of your intended position. If it pulls back after hitting resistance, if the 50-period moving average retests the breakout point, then you can add another 25%. If it rallies to make a new higher high above the 50-period moving average, you add more, so on and so forth. So that's how we would play Chipotle Mexican Grill, but I would not buy below this lower band of support. Where I would look to buy is down here at the lower band of this trading channel. Indicators look good. Stokes look good. Would I be shocked if it popped higher tomorrow? Not at all. Would I buy it? No. I would wait for the pullback. No rush here. We broke out on RSI. That's a good sign. So you have an indicator leading price performance, but that's not enough for me to want to get involved just yet. And that's it for tonight, folks. Everybody have a great evening, and I will talk to you tomorrow. Be well.